Hey everyone, it's Zach back with a new mortgage video. If this is your first time seeing one of my videos, welcome to my channel where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe and share. Today, I'm going to explain the underwriting process, which is a crucial step to getting approved for a home loan. In my last video where I talked about the different levels of mortgage approval, I made the comparison of the underwriter as the test grader, whereas I'm kind of like your tutor for the test. Basically, underwriting is the process of evaluating your financial situation, so things like your credit history, income, assets, and the property that you want to buy. The underwriter's job is to make sure that you meet the lender's guidelines and that you can afford to repay the loan. You can think of underwriting as a quality check for your loan application. The underwriter will review all the documents you've submitted, such as your pay stubs, bank statements, tax returns, and the appraisal report. They'll also verify information through third-party sources, such as your employer, credit bureaus, and through the title company. The underwriter is going to look at three primary factors: your ability to repay the loan, your willingness to repay the loan, and the value of the property that you're buying. So your ability to repay the loan depends on your debt to income ratio. The underwriter will calculate how much of your monthly income currently is going to paying your debts, like credit cards, student loans, car loans, etc. The lower your current debt to income ratio is, the better it's going to look, and the higher a monthly payment the underwriter is going to approve you taking out. The willingness to repay the loan will depend on your credit score and history. The underwriter will look at your credit report to see how you've managed your debts in the past. They'll look at any kind of red flags like late payments, collections, any kind of bankruptcies, foreclosures, big credit events, and the higher your credit score, the better loan options you'll have. The last piece is the value of the property, which will really depend on the appraisal report, which is based on the market conditions. The underwriter will compare the appraised value of the property to the sales price, and the lender is never going to be willing to loan you more than the property is worth based on the appraisal. They'll also check to see if there's any issues with the title or conditions of the home that'll affect its marketability. The higher your appraised value, the better. If you're at the purchase price, great. Anything above that, you're just walking into extra equity, which only looks better. So the length of the underwriting process will really depend on the complexity of your situation. During this time, you're going to be asked for additional documentation and clarification to support your application. The sooner you can turn these in, the better. When we're first speaking about your situation, if I can foresee it being a complex file, I would strongly suggest submitting to underwriting before you have a property picked out. As I explained in the last video, that's going to provide you with the strongest possible approval if you can get approved. Once the underwriter has completed their review, they'll issue one of three decisions: approved, or approved with conditions, suspended, or denied. Approved means you're clear to close, nothing more needed from the loan side of the transaction. Approved with conditions means you're all but approved, but you just need to check off a few more boxes before you get the clear to close. Suspended means that there's some issues or the underwriter's not clear about something, and those need to be resolved before you can continue. I've had, for a personal property, I've had a loan suspended. Also, for a recent client, had a loan suspended. In both cases, we still were able to close. So suspended doesn't mean it's over. It's just there's going to need to be some kind of better explanation or better framing for the underwriter. And then denied just means you've not met the requirements for the loan. You're not eligible for the loan. again, if there's any reason I think your loan might be denied, I would strongly recommend we try to take it through underwriting before you're under contract. The underwriting process can seem daunting, like an uphill battle. It's sort of like you're eating your vegetables part of the home transaction, but it's a necessary step to ensure you get the loan that suits your needs and goals. As your mortgage loan officer, I'm here to guide you through every step of the process and answer any questions you have. Hopefully this video explained a little bit more about the underwriting process of the loan. But if you have any questions, feel free to call or text me at 617-620-0083. Thanks for tuning in, and see you next time.